Europe was sent packing from the weekend's G20 meeting in Mexico with a flea in its ear. No more cash from the IMF until you stump up some of your own. Easier said than done, of course, when the firewall's main contributor, Germany, just doesn't want to cough up. Well, I'm joined live now from Singapore by Grant Williams, strategy advisor at Vulpes Investment Management and author of the investment blog Things That Make You Go, Grant, welcome to the programme.
Hi, Tiki.
I'm just looking at whether the Europeans will indeed get this firewall sorted, because it puts a lot of pressure on the EU summit this week, and we've got countries like Spain pleading that this summit delivers more sort of growth policies.
Yes, it's. I mean, people lose track of it, but this G20 meeting was supposed to ratify some money contributions to the IMF that were put in place last November, and obviously the world's a completely different place since then. So, I mean, you're right, Europe was sent packing. The US and Canada both took pot shots at them as they were leaving. But it all becomes more about this money that Greece is looking to get, and we have a stalemate there. Everybody knows Greece has to leave the euro. The Europeans know they've got to go, but they can't be seen to kick them out. The Greeks know that as soon as they're out, the free money stops. So the Greeks are agreeing to pretty much every condition that's put on them. And someone's going to have to blink, and it's just not going to be Greece, because as soon as they do blink, the free money stops.
I can't believe some of these conditions that are being put on Greece at the moment. They're quite humiliating, really. Volunteer tax inspectors from Germany, I think, and I gather Greece's lenders will have the right to seize the gold reserves at the Bank of Greece, which are presumably sitting under the bank.
Well, that's right. I mean, it's 111 tons of gold that Greece has sitting in the vaults of the Bank of Greece, and you put a condition on like that. Realistically, should the events transpire that give the lenders the right to seize that gold, I think we all know that there's no way the Germans or the Italians are going to march into Greece and take the gold from the Bank of Greece. So it's another ridiculous condition that's just not workable in the real world.
I mentioned Spain just a little while ago. Are you particularly concerned about Spain, given the size of it? Because we, at first instance, normally talk about Portugal at the moment.
Well, Spain's been lucky. I mean, twice it's dodged a bullet. I mean, it was absolutely in the crosshairs when Greece first started to go bad. People looked past Greece. Portugal was next, but there's no real money for people to make out of trading Portugal. But Spain was the next one up. Then suddenly Italy got drawn into the fire, and everybody bypassed Spain. Now it's going to come back around. Italy seems to have been firewalled. They have a primary surplus. They're not in as bad condition, but the economy in Spain is absolutely imploding. You look at the unemployment numbers. You look at the mortgage numbers. It's in a terrible, terrible state. And I suspect that Spain's day of reckoning is coming.
So do you think we are at any stage going to get the IMF to come to the party if, as I say, the firewall doesn't actually happen? Are there going to be the amounts of pressure that are needed for the countries of the IMF to tip in?
It's a tough one. I mean, I think everybody is now finally starting to get the joke that realistically this is a bottomless pit, and to keep shoveling money into it is just a foolish errand. I mean, the people who are contributing to the IMF are running out of money themselves, and sooner or later, enough really is enough. And I suspect we've reached that point in the road where the contributors to the IMF are just going to say, look, we're not going to throw more money at Greece. They're going to have to walk away.
The other big event this week, of course, is another LTRO refinancing from Mario Draghi at the ECB. That presumably will buoy markets, but is it actually going to help the crisis at all, do you think?
Well, I think initially it's a win-win. I mean, whichever way this thing goes, it's going to be spun very positively. If there's a big take-up, the spin is going to be that the banks have secured their funding needs for the next couple of years, which helps them in safety, and it's also going to mean there's a lot of surplus cash that's going to find its way back into government bond markets. If there's a low take-up, people will say that the banks are in better shape than we thought, and their balance sheets don't need shoring up. So either way, the initial reviews, I suspect, are going to be positive. But give it a couple of days, give people a chance to dig through the numbers, see which banks are taking what and what collateral is being offered, and I think the hangover could start then.
Grant, finally, I noticed in the South China Morning Post this morning that home prices in the main cities on the mainland of China are likely to drop this year by 20%, according to analysts. I mean, we were fearing these sorts of numbers, but that sounds like a crash to me.
Well, it's a little early, Tiki. I mean, the numbers over the Lunar New Year, which is traditionally a big time for transactions in the housing markets in China, were very, very bad. That's without saying. Beijing, not a single new apartment traded over the Lunar New Year, and in Shenzhen, I think the average was 3 a day, which is very, very low. we all know there's a bubble in Chinese property. We all know it's going to deflate. We all know that's started. But I think it's a little too early to call it a crash, because we just don't know how the Chinese are going to deal with this. They have plenty of tools and they have plenty of cash available to try and soften this blow.
Some year of the dragon. All right, Grant, thank you very much for joining us tonight.
Thanks, Dickie.